17, 18. Huh? Troy. Nice to meet you. Control testing 1, 2, 1, 2. Huh? You couldn't turn down the donut. Mic check 1, 2, 1, 2. Oh, control testing 1, 2. This is the microphone check. You good? All right. Control testing 1, 2. This is the microphone check. 1, 2, 3, 4. Sound check 1, 2. Sounding good in the room. Sounding excellent in the room. Control testing 1, 2. Sound check 1, 2, 3, 4. How's that?
The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I want to thank all of our witnesses for being here. I want to thank my colleagues for coming to Little Rock for this great opportunity. And I now recognize myself for 4 minutes for an opening statement. In the House today, in the Financial Services Committee, this is a big day because this is not only that we're having a hearing here in Arkansas, my home state, but it's also the first field hearing of this Congress for the Financial Services Committee. In my view, there's no better way to start the committee's field work than by examining the benefits that financial technology is bringing to communities and Americans across our country. As history has shown, financial innovation is the lifeblood of the United States and has been certainly for the past 75 years. As FinTech continues to expand and develop, we've reached a critical inflection point where it's embedded in communities across the United States, including right here in Little Rock. In Arkansas alone, companies raised a record $201 million in venture capital in 2022, an 87% jump from the $107 million in 2021. Here at the Venture Center, 40% of the companies that participated in FIS's FinTech Accelerator in 2022 were run by women. This growth is impressive, and we would be remiss not to give credit to the efforts of all the witnesses sitting before us today. Because of Commissioner Marshall, Arkansas banks of all sizes are able to safely and successfully integrate FinTech products and services into their offerings for customers. Because of Arthur and Joel's collaboration, up-and-coming FinTech companies like our guests are able to build and develop in an environment that want them to succeed and willing to provide the necessary guidance and resources to ensure that success. And lastly, but certainly not least, because of Mr. Loganathan and those like him that show the benefits of FinTech knows no boundaries here in the U.S. With our deep roots in FinTech, including the founding of Systematics over 5 decades ago, I'm proud of the FinTech hub that Little Rock has become. And I'm eager to share my state's progress with my great friends and colleagues that are with me today, Mike Flood of Nebraska and Wiley Nickel from North Carolina. We are proud to, I want to say just greetings from my friend Steve Lynch, who's the ranking member of this committee, who's from Boston, but he is hosting a cabinet member in Boston today and could not be with us. So with that, let me thank my friends for being with us. I look forward to the witnesses' testimony, and I now would recognize Mr. Nickel for his opening statement for 5 minutes.
Thank you so much, Chairman Hill, for convening our committee here in Little Rock. It is a wonderful pleasure and an amazing honor to be here in Little Rock for this field hearing. Our focus today is on innovation, and I'm very proud of my state, North Carolina. It's something that we do very well. My district benefits heavily from North Carolina's Research Triangle Park. It's a prominent high-tech research and development center renowned for its concentration of innovative companies and academic collaborations. Thanks to Chairman Hill, I've learned that Little Rock is emerging as a significant innovation hub for FinTech companies, attracting a diverse range of startups and established firms with its supportive business environment and growing tech ecosystem. Much of this is thanks to our host today, the Venture Center of Little Rock. I'm very much looking forward to hearing more about the work you do here. FinTech companies are vital in driving economic growth by introducing innovative financial services and technologies that enhance efficiency and accessibility in the financial sector. Their emphasis on digital solutions democratizes financial services, allowing underserved and unbanked populations to access banking, loans, and investment opportunities, thus promoting financial inclusion. Furthermore, fintechs stimulate job creation and foster a competitive environment that encourages traditional financial institutions to innovate and improve their services, contributing to overall economic development. As members of the Financial Services Committee, it's our responsibility to foster an environment where fintechs can thrive while never losing sight of consumer protection. And I yield back.
Gentleman yields back. Mr. Flood, you're recognized for 1 minute.
Thank you, Mr. Chairman. I want to start by commending the chair for having a field hearing here in Little Rock. It's nice to get out of Washington, D.C. and actually see where the rubber meets the road. This city is, as I understand, steeped in history, a cultural melting pot, and is the perfect example of a kind of community that punches above its weight when it comes to its spirit of economic innovation. I was at your museum last night your art center, unbelievable. We walked through the collection. We had a wonderful dinner. At the time I was there were 3 different events going on. There was a YPO group, there was a concert, there was our dinner, there were others. People were mixing and enjoying life. And I do think that having a vibrant arts culture added with public art and the effort to bring density into your downtown are some of the key hallmarks of a community that wants to grow in this space. We're here today because towns like Little Rock, Arkansas should get every single opportunity to partake in the innovation economy. Innovation shouldn't just happen in Austin, Boston, San Jose. It belongs in every single state in America. In fact, if we don't get into innovation, we will be left behind. And so the efforts of our chairman here, your community leadership, businesses, and most importantly, entrepreneurs. Today, too many young people are taught not to take a risk. We've got them in sports from 6 in the morning until 10 p.m. at night. And they know what they're told to do by the time they're 19. They don't ever think about taking risks. And the reality is 8 to 8.5 out of 10 startups fail. And we need to remind people in America that there's merit in failure. It means you tried. It means you learned something. And you use those failures to become successful down the road. Projects like this make a big difference. And if you're a smart kid growing up in Arkansas or Nebraska, we need towns like this to take those smart kids that come off the farm or from a rural area and bring them to a town like Little Rock and let them thrive. I always tell people in Nebraska, we raise the gold that the rest of America wants to hire as a CEO. You do the same here in Arkansas. You raise these young people with integrity. You raise them with honesty. You teach them well in your schools. You bring them to towns like Little Rock or maybe in their hometown. They start a business and they thrive. We just need to make sure that the young people of Arkansas, like Nebraska, know there's an opportunity for them in a place like this. So I'll close again by thanking the chairman. He came to Lincoln, Nebraska to headline my Flyover FinTech event in August at the University of Nebraska-Lincoln. He gave a dynamic speech, I think underpinned by what he's seen here in Little Rock. It was right on par for what we were looking for, and I'm excited to be in Little Rock. I love this. And the other thing I'd say is that this does not happen because you followed some checklist. This is very hard to create. And it is, there's no roadmap for this. You have to invest in entrepreneurs. You have to find the capital for at-risk business ventures. You have to put all the people in the same room, and ultimately the entrepreneurs have to run it. And I'm hopeful that today, I'm sure I will, I'll learn all about how you've accomplished this and learn what it's producing for the good people of Arkansas. With that, I yield back.
Gentleman yields back. Today, we welcome the testimony of Commissioner Susanna Marshall. Commissioner Marshall is the 22nd Commissioner of the Arkansas State Bank Department and the 19th Arkansas Securities Commissioner. Mr. Arthur Oduna is the Executive Director of the Venture Center here in Little Rock, which is an organization dedicated to helping entrepreneurs and startups become high-growth businesses, and is our gracious host today. Mr. Joel Wheelis. Mr. Wheelis is the Senior Vice President, Head of Products and Services for Banking, Large Financial Institutions at FIS Global. He's got his FIS green tie on today. He's a leading provider of fintech software solutions for banks and payments and investment companies. FIS also partners with the Venture Center and is the host of our FIS FinTech Accelerator here in Little Rock. Mr. Ravi Loganathan is the head of Financial Institution Services and president at Sardine X Consortium, a real-time fraud database that brings together a variety of entities in the financial services space to combat and share data about fraud on platforms. His company are also graduates of the FinTech Accelerator, so that's to be congratulated. We thank each of you for taking time to be with us today. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony, and without objection, each of your written statements will be made part of the record. We are honored to kick it off with my friend, the Commissioner. Commissioner Marshall, you're recognized for 5 minutes.
Thank you and good morning. Chairman Hill, Representative Flood, and Representative Nickel. It is my sincere privilege to speak with you today. I would like to thank the House Financial Services Subcommittee on Digital Assets, Financial Technology, and Inclusion for convening this important hearing. My name is Susanna Marshall, and I serve as the Bank Commissioner for the State Bank Department and the Securities Commissioner for the Arkansas Securities Department. I appreciate the opportunity to share how states, particularly Arkansas, are actively engaged with all stakeholders in the financial technology landscape. As a state regulator, I have a unique vantage point to both the bank and non-bank industries. In Arkansas, we continue to develop and enhance our existing relationships with these industries in order to gain further awareness around innovation technology within the financial services arena. We foster opportunities for outreach and partnership with discussions on fintech firms and third-party providers. And lastly, we strive to work collaboratively within the regulatory industry to achieve consistency and provide resources to create thoughtful and appropriate oversight for the future of financial technology. Creating an environment of responsible innovation enhances local economic development, market competition, and safety for consumers. My agency has made financial innovation in our institutions a topic of discussion. We believe it is important to encourage our regulated entities to explore and adopt innovative technology in a strategic, safe, and thoughtful manner. State regulators understand the significant role technology plays in banks' abilities to provide excellent products and services and meet the needs and demands of all customers, including both businesses and individuals. The State Bank Department, at the request of our banks, has joined in direct conversations with the bank and fintech firms, which the bank is evaluating for business opportunities and partnerships. We wholly believe these introductory conversations are impactful and yield positive results for all parties, and we actively support this engagement. Across the country, other state regulators are holding tech sprint events where interested parties collaborate on ways to develop a long-standing relationship with firms such as the Venture Center and other partnerships such as the FIS FinTech Accelerator hosted here in Little Rock, as others in other cities and states in this country. I, along with other team members from the State Bank Department, have participated in the Venture Center's Vincent FinTech Summit, which has spotlighted the great work and success happening within the FinTech sector. In terms of regulatory collaboration, I've had the pleasure of joining other regulators as participant in the Venture Center's early audiences, availing all of us with the opportunity to learn more about the program and its participants, and affording us the ability to offer critical feedback and thoughtful suggestions on how these products and services may ultimately become a part of an institution's portfolio. As incubators of innovation, states have experience with developing regulatory approaches for emerging financial services. For example, the Conference of State Bank Supervisors, CSBS, formed several advisory and working groups involving fintech industry representatives to enhance state regulator coordination and focus on risk while minimizing regulatory burden. Since 2019, I have served on the CSBS FinTech and Innovation Steering Group with state bank regulators from across the country. These group members meet regularly to discuss fintech and other financial services innovations and how to best to help shape potential bank and non-bank regulation. In June of this year, the federal bank regulators issued joint interagency guidance for banks managing the risk of third-party relationships, including those with fintechs. This guidance is aimed at eliminating unnecessary confusion by harmonizing supervisory views on relationships with third-party vendors. State regulators are well-positioned to marry the consumer benefit of new technologies with consumer protection, and we must not be impediments to safe, sound, and thoughtful implementation and adoption of financial technology by the industry. With the majority of customer-facing technology being outsourced to third-party vendors, this work is more important than ever. In closing, the financial services industry has been and should continue to be the foundation for innovation. Technological innovations can increase a bank's ability to reach and serve the needs of unbanked or underbanked consumers and communities. And as we witnessed in the recent pandemic, there was an accelerated utilization of technology for increased access to financial services. I am very proud of the important work that is happening here in Arkansas, specifically at the Venture Center, and how it serves as a model for financial services innovation across the country. With a rich history in entrepreneurship and economic development, a legacy of innovation and financial technology, a favorable business environment, and a thriving banking community, it is no surprise that Arkansas is home to its own FinTech Accelerator. On behalf of the state regulatory and financial services system, I want to thank you for the invitation to speak, and I look forward to answering any questions you may have.
Thank you, Commissioner. Mr. Orduna, you are now recognized for 5 minutes for your oral remarks.
Thank you. Good morning. Chairman Hill, Representative Flood, Representative Nickel, members of the subcommittee, my name is Arthur Orduna. It's my privilege as Executive Director of the Venture Center to give this statement on the importance of building and supporting innovation and entrepreneurship ecosystems at the local, state, and regional levels in America, with Arkansas, the work of the Venture Center and its partners, as an example of public-private collaboration and initiatives that generate meaningful and measurable economic benefits to communities and businesses. A shout out to my teammates who have made this hearing as well possible today, as well as all of their hard work. The Venture Center is a nonprofit 501c3 entrepreneur support organization based in Little Rock, Arkansas. We were founded 10 years ago with a mission of accelerating success for startup founders, small business owners, and corporate innovators through entrepreneurship programs, platforms, and partnerships. Our vision is to help raise Arkansas to regional, national, and global leadership in entrepreneurship and economic prosperity. Over the last 10 years, early stage and growth companies who have gone through our startup and business-driven accelerator programs, especially through our FinTech accelerators done in partnership with FIS and community, state, regional, and national banks, have raised more than $2.5 billion of private capital, with an average funding raise of $17 million. Despite capital market challenges, more than 85% of those companies are still in operation or have been acquired by entities still operating today. I welcome 4 of them here today as well. Our programs and their participants have generated more than $30 million in documented economic benefit to the state of Arkansas, including more than $1 million in tourism for Central Arkansas and Little Rock. We have helped with the launch and relocation of technology-based companies in Arkansas, including 10 in the FinTech sector. This has led to the creation of more than 180 new high-tech wage jobs in the state. Just this past year, we've congratulated 2 of our program alumni companies who were recently purchased by private equity for $30 million and $300 million, respectively. As a result of our programs and activities, we've created a network of more than 16,000 individuals, agencies, and companies who continue to support us. This last point is paramount. We could not execute our mission without partnerships from multiple sources. Critical support to help achieve these results has come from the corporate sector, as exemplified by our partnerships with Little Rock-founded FIS, and banks such as Simmons and Arvest. From the municipal level, as exemplified by our partnerships with the City of Little Rock, the Mayor's Office, and the Chamber of Commerce. And the state level, as exemplified by our partnership with the Department of Commerce, and especially the Arkansas Economic Development Commission. Welcome members here today. We're also grateful for the support of our federal officials and elected representatives serving the people and communities of Arkansas, including the encouragement and support of Chairman Hill, a former Arkansas banker. I respectfully offer the following recommendations based on the experiences and challenges we've lived through here at the Venture Center. First, to other ESOs around the country, take a portfolio and business-driven approach to fostering innovation at the community level. In our view, a healthy community ecosystem comprises a pipeline across all of these. This has been a key reason for the success of our FinTech accelerators. Next, to other state, county, and municipal governments and agencies, improve the level of innovation and entrepreneurship by improving our community's quality of life. Great communities attract and grow great people. It's simple and it's true. My wife and I are from Des Moines, Iowa, and we strongly believe that the strong economic performance in Central Iowa over the last several decades is based on the fact that it's a really good place to live and grow. The same is so well said of Little Rock in Arkansas. Finally, to federal government legislators and agencies, work proactively and collaboratively to think through how to help at your level the commitment of multi-year funding to nonprofit entrepreneur support organizations. While this is a self-serving recommendation, my request encompasses all the ESOs that share our mission in Arkansas, such as the Innovation Hub, Startup Junkie, The Conductor, and others, as well as ESOs in the other 49 states. I suggest as a starting point, perhaps with this subcommittee in a leading role, to begin a dialogue with the ESOs and their key partners in your respective constituencies on identifying actionable initiatives that may already be in flight. Thank you, and I look forward to your questions.
Thank you. The gentleman yields back. Mr. Wheelis, you're recognized now for 5 minutes for your oral remarks.
Chairman Hill and members of the subcommittee, my name is Joel Wheelis, and it's my privilege to, as Senior Vice President of Products and Services for Banking at FIS, to testify before you today to highlight the importance of building financial innovation ecosystems throughout the United States. Based in Jacksonville, Florida, with a significant footprint here in Little Rock, FIS is one of the world's largest and oldest financial technology companies, facilitating commerce across the global financial system. We enable 95% of the world's largest banks, move over $10 trillion of payments annually, over 1.3 billion payment cards, and process 1.5 times the U.S. GDP on our asset management technology. By providing a range of services to participants across the financial services value chain, we have a uniquely comprehensive position in the market and a keen interest in fostering a vibrant startup ecosystem. In particular, FIS prides itself on its FinTech Accelerator program, which identifies and advances startup FinTech firms with high potential. The growth of the FinTech sector, like any industry, depends on supporting an ecosystem that connects capital, infrastructure, and a conducive regulatory environment. Along with local partners like the Venture Center and the Arkansas state and local government, FIS supported the development of a world-class innovation ecosystem here in Little Rock. In 2016, FIS established the Accelerator to bridge the gap between our traditional financial institution clients and new innovative FinTech startups. We recognized that we could not possibly think of every solution to make our clients' experience better. Therefore, we sought to strategically invest in and support high-potential startups that facilitate product diversification and help our clients stay on the cutting edge of new technologies. Our community banking clients in particular have benefited from the Accelerator ever since. Each year, we help select 10 innovative technology companies to advise, connect, and showcase their products and services to the financial industry leaders, potential investors, and successful engineers, as well as FIS's financial institution clients. Since the Accelerator began, it has graduated 80 alumni, 90% of which are still active or have been acquired. This includes companies such as Bond AI, a company headquartered in Arkansas, and Trust Stamp, a company that recently completed an initial public offering. Their success not only benefits the local economy, but it also helps move the entire industry forward. Accelerators are critical for growing new FinTech companies. However, successfully developing products and services that meet the evolving needs of consumers also requires active participation from government leaders. By engaging with lawmakers and regulators early, new FinTech companies can quickly iterate and develop products to accurately reflect regulatory requirements and keep consumers safe. A principal way that regulators can participate in accelerating emerging technologies is by creating innovation sandboxes. A sandbox allows the fintechs to develop and test products on a limited basis without fear of regulatory reprisal before going directly to the market, reducing the uncertainty of what may or may not be a feasible path forward. It also helps regulators build knowledge of new technologies and assess the potential application of existing law and regulation. FIS also encourages federal, state, and local lawmakers to consider additional tools to reduce barriers and incentivize innovation. First, clear legislative and regulatory framework must be in place to facilitate the ability of financial institutions to partner and benefit from innovative FinTech solutions. Second, talent development grant programs must receive investment and implementation guidance to support the growth of a strong local talent pipeline. And third, incentives such as tax breaks and grant programs should be considered to make cities and regions more attractive to investors, large corporations, and entrepreneurs. Venture capital funds are looking for high-quality, innovative companies with strong potential, irrespective of location. So incentivizing development of local ecosystems like the one in Little Rock is a first step in raising awareness about investment opportunities. The public-private partnership in Little Rock demonstrates how financial institutions, startups, and regulatory bodies can cooperate to build a successful local ecosystem. The results have been more than impressive, leading to numerous benefits to FIS, our clients, the startups, and the economies of Little Rock and wider Arkansas. Over the past 8 years, FIS Accelerator alumni have raised more than $1.5 million in capital, and $1.5 billion in capital. It is our hope that other state and local governments and convener organizations, such as incubators, can replicate this partnership model and generate economic growth, jobs, and attract talent transplants literally from around the world. Thank you again for the opportunity. I look forward to your questions.
Thank you very much. Mr. Loganathan, you're now recognized for 5 minutes for your oral presentation.
Thank you, Chairman Hill, members of the subcommittee. I'm Ravi Loganathan. I head up our financial institution business line at Sardine. I also head up our Sardine X consortium that brings together banks and fintechs to fight fraud. It's a privilege to be here today to discuss the crucial interplay between traditional banking sector and the rapidly evolving fintech industry and the critical role of fostering innovative ecosystems across America. Sardine is in the fintech landscape is making contributions to behavioral-based fraud detection, compliance, and risk management. Our mission is to revolutionize the way financial transactions are secured online, protecting all participants. Our diverse team, comprising industry veterans from institutions like Revolut, Coinbase, Zelle, PayPal, and Bank of America, bring a wealth of experience enabling us to navigate the complex challenges in today's financial services sector. Our comprehensive suite of solutions are designed to address the nuanced demands of modern risk management. This includes our flagship offering in behavioral-based fraud prevention, which utilizes a blend of device intelligence, behavioral biometrics to outsmart and preempt emerging threats. With over 200 clients across the globe, including fintech and traditional financial institutions, Sardine monitors transactions today with over 150 billion in transaction volume. In today's testimony, I aim to shed light on how risk management plays a critical role in facilitating collaboration. Additionally, I will highlight how regulators and accelerator programs are instrumental in bridging the gap between banks and fintechs and facilitating collaboration. I'll start on the risk management side by highlighting two solutions Sardine currently has in the marketplace. Sardine X, which is the consortium that is helping bringing together banks and fintechs, and our Sponsor S solution that is enabling community banks and credit unions to scale their banking-as-a-service offering. Sardine X is pivotal in managing real-time counterparty risk, especially as the U.S. now moves to real-time payments and instant settlement with systems like FedNow and the clearinghouse RTP rails. The utility allows parties in financial services to inquire about the entities conducting the transaction. Upon inquiry, Sardine provides signals under the framework of the Gramm-Leily-Bleach Act for fraud information sharing and Section 314B of the USA Patriot Act for detecting money laundering activities. These insights are crucial for institutions to make informed decisions in real time to enhancing transaction security. Furthermore, Sardine is a member-run organization representing a diverse group of financial institutions and fintech. Its operating rules and governance structure are ratified by its members, ensuring a collaborative approach to managing this critical utility. Now I'll turn to Sponsor OS, which is tailored for banking as a service. It is vital for helping regional and community banks scale programs while effectively managing regulatory and reputational risk. It provides a uniform platform for fraud detection, compliance service, and risk management, indispensable for banks in automating control mechanisms for their fintech partners. SponsorOS also enables banks to proactively monitor fintech partner performance and mitigate compliance and regulatory risk, simultaneously empowers fintechs to comply with banks' program standards by implementing robust fraud detection and compliance systems. This twofold approach not only streamlines operations, but also ensures that both banks and fintechs adhere to the highest standards of security and regulatory compliance, fostering a mutually beneficial, risk-aware partnership. The emerging threat of AI-enabled fraud, including generated phishing, deepfake, identity theft, automated social engineering, underscores the importance of our work. A united front with banks and fintech companies collaborating and sharing data is essential to counter these sophisticated threats that are emerging in the financial space. Regulators play an important role in setting the framework for collaboration and innovation, shaping how financial institutions and fintech can work together effectively while ensuring consumer protection and market stability. Enhancing the U.S. regulatory framework, perhaps through a coordinated relief of the regulatory sandbox participants and universal standards, could foster a more innovation-friendly environment. Such regulatory enhancements would not only stimulate fintech innovation, but also ensure a balanced ecosystem where risk management and consumer safety are paramount. The approach could draw inspiration from international models, especially in the UK and Singapore. Finally, the accelerator programs, such as the one offered by FIS and Venture Center, are critical in building out the innovation ecosystem. Our experience in participating in this program last year was invaluable, providing Sardine with critical market insights, access to subject matter experts, and strategic connections with future customers. These programs are instrumental in propelling fintech startups and offering them resources to navigate the financial sector's complexities. To conclude, the dynamic financial sector necessitates a stronger partnership between banks and fintechs with an emphasis on robust risk management. Such collaborations are essential for addressing challenges like AI-enabled fraud and leveraging technological advancements. By joining forces, we can forge a financial ecosystem that is innovative, inclusive, and secure. I look forward to this discussion and your questions. Thank you.
Thank you so much. We're now going to turn to members' questions, and as a warning to my colleagues, we'll have multiple rounds. We'll go until you run dry, Wiley. So I'll start out. I'll yield myself 5 minutes for questions. I'll start with you, Commissioner Marshall. First, thanks for your leadership in the state. So grateful for your decades of service to our financial institutions here. And, wow, thanks for stepping up to be Securities Commissioner, too. That's no small task. Proud of that. Last week, sort of on Ravi's point, we had a hearing in our subcommittee this week, actually earlier this week, on this issue of innovation in the regulatory agencies and this sandbox issue, because there's been a big, I think, a real mixed signal sent by the Biden administration on that vis-a-vis the Trump administration when they were first getting started. So we had all the agencies present. We had their heads of innovation there, the first time they'd ever been invited to Congress to testify. I thought it was pretty productive. The give and take was good. I think the most important thing was that we did it, showing oversight over this innovation sandbox arena at the regulatory agencies and demonstrating kind of what a mixed bag it is. Nothing really to brag about, I would say, but some baby steps. We asked them, do you coordinate together? Do you have innovation together? Do you have a council that meets not on a global basis, but just among yourselves, for example? But, Commissioner, the Fed in August issued this novel activities rule, not a rule, it's really a very short one-page memo, but went out to every financial institution and all the state commissioners. And in my view, it was meant to be targeting digital assets, crypto, and being cautious about that, really asking institutions to come get pre-approval to do something. Well, as a longtime banker, I'm not really used to pre-approval on routine matters. Do you think this novel activities rule could create confusion? And do you think it's also challenge bankers that it goes beyond digital assets and crypto into just fintech more generally?
Thank you, Congressman. I did follow the hearing earlier this week and was proud to also see my counterparts across the regulatory system speak to what they're doing. Specifically to your question, the the industry, the financial technology industry moves so quickly and has and will continue to move at a rapid pace. I believe the guidance and the requirement for things to be called a novel banking activity could perhaps lead to some confusion, but I think it's important that the industry, banks themselves, the regulatory industry, that we're all at least ensuring that we're talking to each other. Because as I said in my testimony, I think what's so successful, or when fintech can be successful, is when you have those early conversations. And maybe the prior approval part is not necessarily aligned with most community banks and what their normal activities are. Certainly, I think a traditional fintech activity, product and service, banks have been doing that for many, many years, and are doing it very well and very successfully. And so I think that is outside of the novelty idea. And I don't think that needs to be a pre-approval type of activity, because that's normal business operations. And I think we need to continue to foster that. There are some areas that may be certainly groundbreaking, areas of which we have not seen as part of our financial services industry. And so that I'm hopeful that guidance or the direction from the federal regulators shed some light on that, and we can come together to try to make sure we're all on the same page. That's critical, as we've all said today, and but not make that an area where we just clamp down on the opportunities for banks to advance, but ensure they do so in a safe and sound environment.
Well, have you seen a particular example over the past 5 years in your leadership where fintech really has allowed a community bank to thrive and expand safely and soundly its mission for either business or household customers, or even improve their compliance numbers?
Yes, sir. Absolutely. You know, there's Arkansas banks have a variety of sizes. I have banks that are right at $30 billion, and I have banks that are right at $30 million. And I believe that fintech should not be categorized for one asset size or the other. It should be able to serve every type of institution, whether it's a rural bank in Southeast Arkansas or a bank here, Central Arkansas, that has operations in 12 other states. I believe that all banks can be successful utilizing fintech. I believe it's also an opportunity for a small community bank in a cost-effective and managed way to reach new markets, or perhaps continue to serve markets where they felt previously they were unable to meet their consumers' needs. I think I've seen where fintech, and maybe it's a basic form of fintech, but when an institution that could not staff a full-service branch in rural Bradley County, maybe they have an interactive teller machine, or deploy the next generation of a financial banking app to reach those customers. I've seen that work firsthand, and I'm very proud that our banks are adopting advances in technology.
Thank you. Good examples. My time has expired. The gentleman from North Carolina, Mr. Nichols, recognized for 5 minutes.
Thank you. Mr. Orduna, given your expertise at the Venture Center, how do you see fintech startups specifically contributing to economic growth, and what areas of financial innovation hold the most promise for future development?
Thank you for the question. I'll start with the fintech sector and something that not looking at the past, but looking ahead. So my teammates and I are starting to work with members of the Arkansas Bankers Association, beginning in the community banks and in the rural areas, to try to identify the priorities and the problems of two types of customers. One is obviously the borrowers that they face on the, that they're serving. The other is their internal customers. How can they be more efficient? How can they deal with new technologies? And I got to tell you, like talking to Brad Chambliss and his folks down in Stuttgart at Farmers and Merchants, the word fintech is scary, right? And so thinking about technology in general, we need to actually translate that into prioritized problems and opportunities that begin with the communities. I know those are nice words, but that's what we take, working with banks and with financial institutions and providers, to actually identify who are the right kind of technology providers, whether it's Sardine, whether it's Bond AI, SecureTech, whether it's Bank Labs, to come in and work directly with those community banks and for them and their customers. And so, Mr. Nickel, that actually translates directly not just into a good funding round for the startups, which is great, but it actually translates straight into new products, new services that are going to help folks, hopefully like Brad and his team, to provide more growth to that community. That's the end game.
And that's a good transition to my next question. Just as we go back to Washington, what are the things we should be doing to help encourage more accelerator and incubator programs like yours here nationwide?
Great question. I've been in the corporate world more than I have been in the on the accelerate on the side of light and goodness. Just kidding. But and so I saw the wave more than a decade ago, of some real excitement about, providing entrepreneurship support into the center of the country. And Steve Case, did a great job of getting things started. And I know we've seen a bump in some capital investment in some of these areas. It's not enough. It hasn't been sustainable, right? And so I think, Mr. Nickel, what I suggested that we start a dialogue, and I think what I would strongly suggest to those folks in D.C. is to begin that dialogue exactly what's happening here. Begin it at home. Because there's a lot of initiatives and a lot of ideas of the folks that are sitting here already, right, that need your level of support. Now, what that support could be, it could be just recognition that there's some programming already or funding that's in flight that's applicable, or it could be something novel and new, right? But I believe that having these kinds of issues, Representative Hill had a town hall here earlier in the year where we'd like to replicate that and actually bring in a bit more of the opportunities, right? So I believe it begins with your constituency, quite frankly.
Thanks so much. I'm going to come back to more specific stuff with the next round of questioning and talk with you about accredited investors. But Commissioner Marshall, really enjoyed speaking with you earlier and wanted to dig in on another issue here. From a regulatory perspective, what are the key challenges and opportunities that you're seeing in overseeing fintech companies?
Overseeing institutions that are working with.
Yeah.
Thank you, sir. Yes, sir. As we're visiting with our institutions, I don't want to make it sound that the list of obstacles is longer than the list of opportunities, but maybe that's what we hear the most of, correct?
We get those complaints a lot more. Sure.
We certainly hear conversations about how are these products and services going to integrate with their core service providers, which is a critical piece to every financial institution and becoming more so every day. Is the adoption, is the acceptance going to be supported by staff and as well as the customer base on a larger scale? Do the banks have the necessary staff to really engage in participating with certain fintech firms? What are the compliance risks? What is the cost, the onboarding cost and the maintenance cost? Do we have a potential risk for cyber or other IT-related issues? And then, of course, certainly do we have the management structure to continue to maintain it? But opportunities they see is reaching new sectors, new communities, new markets. They may have an opportunity to experiment with a different product or service on a smaller scale that is more cost efficient, actually, and then make the determination to exit that strategy if need be. And, of course, reaching individuals that may not be able to access products and services more timely.
Thanks so much. I yield back.
Gentleman yields back. Mr. Flood, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. And I'm going to hold my questions about the Venture Center to my next round, but to Mr. Wheelis and Mr. Loganathan, I want you each to react to two different topics that really came up during your testimony. First one is I want to talk about cyber attacks, cybersecurity. I want you to react to the idea of biometrics being fooled by deepfake AI. I can turn my phone on by having it look at my face. I also do that to get into my bank account, my Marriott Bonvoy account. Is innovation happening in that space, and if so, what's happening? And the second topic I'd like to hear from you both on is DeFi. When I engage on Twitter with younger folks in my district all over the nation, they continue to try and bring the conversation back to this concept of self-custody, DeFi. These are two very different topics, but I'd like to give you each 2 minutes to react to the cybersecurity, AI, deepfakes, and then what do you think about DeFi? Where's it going? Is it real? Is this something we're going to deal with this decade? With that, we'll start with Mr. Wheelis, if you would.
Yeah, so as far as cyber and deepfake, and that is absolutely a point that we must all stay on top of as we innovate and move forward. FIS invests a tremendous amount of money, obviously, to try to protect. We've seen, as we mentioned earlier, we've seen hack attempts. We've seen successful hacks in certain areas. So we know that that's going to be where the industry goes, and that we know that we're barely on the front end of it right now. So I think the investment is paramount. I think that you'll see more sophisticated, obviously, with generative AI. It's going to make it easier for the bad actors to implement their threats. So, as far as the cyber moving forward, it's just going to be one of our primary focuses. There's no doubt about it.
Okay. Mr. Logathon.
Yes, let me, thank you, Congressman, for the question. Let me answer your first part of the question around emerging threats, particularly with cyber AI-driven threats. Particularly with the advent of AI, what's going to happen in terms of fraud vectors is that it's going to be automated at a scale much higher than what you see today. So if you look at all the data breaches we had over the many years, that data is now available in the dark web. So now with AI, those AI can be now trained on that information and creating synthetic identity, and hence you're now able to attack institution at a much faster pace. So that's a significant threat. The AI tools are being enabled not only by individual actors, but organized crime, but that, as you also know, there are state actors now involved who are beginning to challenge our critical infrastructure, not only in banking, but healthcare, utilities, for example. The last 2 weeks are a pretty good example, I think you all are very familiar with. This is why, as we think about risk management moving forward, not only in banking, but across other sectors, we have to fundamentally reimagine our detection capability. Our detection capability today in majority of these financial institutions are backward-looking risk models. That is no longer sufficient. You need real-time risk assessment that brings in device, your behavioral biometrics, your cross-bank transaction data, third-party signals to, in real time, to risk assess that transaction. And what I fear is that many of our institutions are not ready for what is coming. And what AI is doing is simply accelerating that threat, because now the fraud attacks and fraud vectors can be done at a much larger scale.
Appreciate that answer. DeFi.
And on the DeFi side, DeFi is here to stay. I think as we evolve and work through the kinks from a risk management standpoint, and the regulatory agencies have done a great job in addressing those risks, and you've seen some of those events in the last year and a half, 2 years. DeFi, digital wallets, is here to stay. Digital currencies are here to stay, and it's going to be a mechanism by which the next generation is going to transact. I think we all need to be prepared in terms of how we're going to address that from a risk management standpoint, and I think that's the work that needs to be done.
Thank you very much.
Sure.
I yield back.
Gentleman yields back. We'll start our second round of questioning. I yield myself 5 minutes. Let me pick up where we left off there. When you think about the current environment, I've argued consistently since I've been on the Financial Services Committee, but certainly in my role in the FinTech Task Force several years ago, and now as chairman of the Digital Assets Committee, that if we want to move from an analog financial services sector to a fully digital one, we have to, abandon username and password. We have to have data ownership by individuals, not big companies. And we have to have a real strict view about cyber protection and fraud protection. So you're on the front line of basically all three of those components. Do you see your products and services easily translating over to a blockchain tokenized payment regime where you're accomplishing the same mission you're doing now in the real-time payment arena?
Very much so. And where we started in terms of developing our solutions was helping fintechs shore up their fraud risk compliance capability So we learned a lot from that, and now we are bringing that capability into traditional finance. To the earlier comment, as you now looking at DeFi and digital wallets coming into play, you still need a mechanism to move money from your fiat side of the house into a digital wallet. And hence, you still need that risk management capability, go through the same due diligence you do on the fiat side. And this is where we are making headway in providing that risk management between financial institutions and the digital wallets, and providing that same risk management capability. So it's very much translatable, and exactly what we're doing right now, because we're basically taking our risk management capability and offering a solution on the payment side, effectively an on-ramp to move funds from fiat to the digital wallets. And we are deploying the same risk management capability. And in that framework, again, the same critical aspects come to play. The need for multiple signals to assess risk in real time. You need to bring in your device, your behavioral biometrics, cross-bank transaction information, device information to in real time risk assess, because money and those digital assets are moving in real time.
Is it your view that in a stablecoin tokenized payment environment on a blockchain, that self-custody or not, self-custodied wallet or not, that the AML/BSA rules of the U.S. can be adequately enforced?
Absolutely, and I think
because this is I raise this because this is a very key understanding gap inside our committee right now.
and I think
We have a real gap in the Senate on this right now. The presumption is ipso facto it's not possible, and therefore they're zeroing in over on something that I think they're missing the forest because of the trees on this issue. And so testimony like this is very helpful, I think, to the three of us.
No, absolutely, and I think we have to kind of start in stages, and I feel like the first stage here, you still need to move fiat into digital wallet.
Yep.
In that transition phase, this is where we can put in robust risk management capability to detect two things: the funds moving from fiat accounts, a bank account, into a digital wallet, risk assess that fiat account, and then as the funds are moving into a digital wallet, risk assess that digital wallet. We have those capabilities today.
And it's but it also, you could extend that to say that someone who's got someone who's performing a digital asset exchange function could do that as well.
Indeed.
And this issue that, yes, there are broad accounts on those exchanges that are effectively in street name, to use a securities analysis view, but they could know that and have that implemented in that crypto exchange environment as well. Looking at that wallet verification, they're not telling you whose wallet it is, but they're verifying that they know who it is.
Indeed, and it's, I believe the same KYC standards that are being applied in traditional finance today could be applied and should be enforced on those exchanges. And I think we're making some great headway in the past year, where we are weeding out those who are not complying and reinforcing those exchanges that are complying with those standards.
Well, it's certainly a focus of the committee. Senator Loomis and I sent a letter to the regulators, particularly on Binance, for example, but we'll talk more about that. My time has expired. I yield to Mr. Nickel for 5 minutes.
All right, second round. Thanks again for our witnesses for being here. Just piggybacking on that a little bit from Mr. Loganathan, you know, one of the things we've done in this committee in a bipartisan way is move forward with a digital asset market structure bill, and whether you love crypto or hate crypto, you should, you know, be in favor of regulation. So that's something that we're going to be tackling as a Congress, hopefully in the coming months. But I wanted to talk about a bill that is one of those good, rare bipartisan bills that we moved in a very positive way. The Equal Opportunity for All Investors Act, our bill that I am the Democratic lead on with Mike Flood, our Congressman colleague from the great state of Nebraska. Unfortunately, most startup capital is concentrated in cities like San Francisco, New York, Boston, rather than cities like Raleigh, Little Rock, and Lincoln. Our bipartisan bill cuts through government red tape to improve choices for investors, regardless of their net worth. This will result in greater access to capital for minorities, veterans, and women, and spur economic growth in places like North Carolina's Research Triangle Park and right here in Little Rock. Certainly very good for startups. Under the current system, only millionaires can be accredited investors, and that doesn't include your house. So when you're talking about whether you have $1 million to be an accredited investor, you can't even include your home. We want to open up lucrative private security investments to individuals with the financial knowledge to understand the risks they're taking, but again, aren't necessarily millionaires. Our bill does just that by expanding the accredited investor definition to allow people to invest in private securities and to include individuals who are certified through a robust exam established by the SEC and administered by FINRA. So if you pass a test, you should be able to be an accredited investor, understanding the risks. I understand, well, I haven't seen anything on this, that there's talk that Gary Gensler wants to move that number up to 5 million, which would price out in so many more people. You know, my goal, I want to move money into startups. I want to encourage that innovation. North Carolina's Research Triangle Park is home to many small biotech companies working on critical life-changing technologies. Many of those companies rely on accredited investors for capital, so a larger pool of investors will improve their access to funding, spurring growth and bringing good jobs to working families in North Carolina's 13th Congressional District and around the country, places like Little Rock. Additionally, according to Brookings, the average net worth of a typical white family is nearly 10 times greater than that of a black family. This bill will enable more diverse investors to participate in this asset class by allowing individuals to become accredited investors regardless of their net worth. Underrepresented entrepreneurs often struggle to access capital, and they greatly benefit from a larger pool of more diverse investors who look like them. So, Mr. Ordonia, to you, first question, does the Venture Center work with accredited investors?
Yes, we work with accredited investors. We are part of the Archangel Alliance, which is a angel investment network here. And obviously, we're strongly allied and partnered with local investors and investment management firms such as Circumference Group.
And have you encountered roadblocks with this definition for folks who want to get in on these investments?
So you're touching on one of the most important topics that occupies literally my time and our time a lot, which is getting these promising businesses access to capital for growth, right? From what you've said about and how you've described this bipartisan bill, first, I'm not surprised it's bipartisan. And second, I think I would personally support being able to open and broaden the definition of an accredited investor as long as they are aware of the risk of investing into early stage venture. But what we've seen here, and what I think is even equally important, I'm not sure if the bill addresses this, is we work with a lot of small businesses that are already generating some degree of revenue, right? And they are also worthy of trying to identify, other pools of capital. We're working with the SBA here in Arkansas and just launched a veteran-owned small business accelerator. The 9, servicemen and women who've now started businesses here in Arkansas, and they're generating revenue this year. One of the, as we went through our curation process, Mr. Nickel, the first and foremost need that they have is still access to capital. So I think that, just circling back, absolutely, we would support the ability to bring in more investors to look at early stage venture, to look at pre-seed and seed. But we would strongly encourage more initiatives as well to go across the portfolio of innovators and entrepreneurs who may already have opened a storefront here or in El Dorado or elsewhere in the state.
And my time has expired, but I want to come back to Mr. Wheelis. I saw you nodding your head, and give everyone else here a chance to weigh in on the rules for accredited investors. It is also worth noting that 383 members of the House voted to move this bill over to the Senate. So the Senate has the bill, and I'm hopeful this is going to be one of the rare standalone bills that we can move on to the President's desk. I yield back.
Another bill sent to the Senate to rest. The gentleman from Nebraska is recognized for 5 minutes.
Thank you, Mr. Chairman. A couple of tough statistics. You know, by 2030, automation is going to take a lot of jobs that we know of right now in the United States. It's going to affect Arkansas. It's going to affect Nebraska. Another one from the National Venture Center Association, Capital Association. California by itself receives 59% of the total venture deal flow in the United States. I'm pleased to hear over $200 million is flowing here in the state of Arkansas, and much of it through this enterprise. You know, Mr. Orduña, you made some really good comments in your opening statement. I would add that my favorite book is called The Startup Community Way, Evolving an Entrepreneurial Ecosystem, and it talks about Boulder, Colorado. You've done that here, and it's ever evolving. While I represent Lincoln, I live in a town of 25,000 in northeast Nebraska. It would be maybe more similar to Jonesburg or El Dorado, Arkansas. We have to have innovation there too. Yeah. How are we, how are you, how is the state of Arkansas connecting with these communities that could be completely left out of the innovation economy, understanding that their success is as vital to Arkansas as Little Rock or Fort Smith or what you've got going in northwest Arkansas?
Yeah, I think that's an ongoing challenge. And I am relatively new to Arkansas over the last 2.5 years. So I bring a little bit of objectivity and a fresh eye. I think it begins with the fact that at the state level, we've got some committed folks and agencies that are really looking to bring not just information, but actual resources and innovation programs like ours and others to all corners of the state, and to entrepreneurs and innovators of diversity in rural areas. And so working with the AEDC here, for example, and then reaching out directly to municipalities, I think is key. But you know, I think one of the things that we need to be is innovative about how we do this, right? And it has to be a mixture both of being on the ground, but as well as taking advantage of new digital platforms so that folks in Jonesboro, right, or folks in Magnolia have as much access to the same level of resources that someone in Menlo Park, right, or someone in Brooklyn has. And I've worked in both areas, right, before coming here. And there is no reason that we can't generate, not necessarily maybe the same volume, but we generate the same quality of innovation and entrepreneurism and the same quality of businesses here than in Silicon Valley or you know, Media Gulch.
Can you also, while we're on this topic, describe some of the work the Venture Center does with the Arkansas students through the Student Entrepreneur Education Collective?
Yes, we're really proud of that work. Some of the things that we've been doing are specific events and programs. We have something called JOLT. I don't believe that's an acronym. I think it actually means, you know, a burst of inspiration where we work with students basically on hackathons and games. And we've been working directly with some of our fellow ESOs. I don't want to just focus on us. Aaron Stanger over across in North Little Rock with Innovation Hub does a fantastic job working with elementary school as well as junior high and high school innovators and entrepreneurs. But obviously, Mr. Flynn, we've got to begin as early as possible. The last thing that I'll say is we held a pitch contest earlier this year at the Discovery Center where we had 11, was it 11, I think? 10 or 11 10 to 12-year-old students come up and pitch. And I will tell you, they were as polished as you could ever hear. So I think our future is pretty bright as long as we can make sure that their ideas get air, oxygen, and capital. So
I want to highlight one thing that you said in your early recommendations in your initial testimony. You said, what can government do? And I was very pleased to hear you say government shouldn't be the catalyst for these innovation, but it should lead the way in quality of life.
Absolutely.
And that can happen in any community of any size. The investment I saw in the arts yesterday, and I'm not somebody who would have maybe voted for the arts when I was Speaker of our legislature 15 years ago, but I see now the direct connection between investment in public art and arts and crafts and building an entrepreneurial community, and I see that on display here in Little Rock. So I think it's outstanding that you highlight that as the appropriate role for the government. So with that, I thank you and I yield back. Thank you.
Thank you, gentlemen, for yielding back. We'll start our third round of questions, which, we can do more, but I intend this to be the last one unless people want to do more. So I'm open to that. We've got the time to do it. So this is a good adult conversation, but this afternoon I get to go over this afternoon to the Innovation Hub, to Aaron Stringer's outstanding operation, something I'm always excited about, and we will unveil the winners of the App Challenge. So the Congress sponsors a technology challenge every fall for all 435 districts around the country, and we ask high school students to come up with their best ideas for an app. And so tonight we will unveil the top apps from the 2nd Congressional District over at the Innovation Hub. And I think on that comment that Mike made and Arthur engaged in, I think this is something I think the state's put a real premium on. And the Kauffman Foundation has done that nationwide, and they've been very active here. And we've seen that effort with things like the Innovation Hub, with partnership with the Rockefeller Foundation and others, and Kauffman Foundation in their accelerator programs at UCA and Conway and up at Startup Junkie and in Fayetteville. These are good things. We need more of those. We need those in essentially all the areas in order to fulfill Steve Case's goal of rise of the rest. Arthur, let me talk a little bit about you talked about investing in centers like this accelerator, and I'd like you to sort of compare and contrast for us. Obviously, the federal government spends quite a bit of money through the SBA and through the small business development centers, now small business development and technology centers, I think is the acronym. Mm-hmm. Can you tell me how you collaborate with them here? We have one on the University of Arkansas at Little Rock campus.
Yeah, we've been collaborating strongly with them, and I'm proud to say this again. The most recent collaboration, Representative Hill, is a new veteran-owned small business accelerator and program. We've worked with the ASP-TDC, and this was really begun with folks like Jerry Talbot at the SBA here, working with Daniel Schutte here at the Venture Center, talking to their friends who are service people and veterans. And I think that what we've been doing is identifying not just that particular group of folks, but also identifying where else could we and who else could we work from an acceleration and innovation entrepreneurship perspective. The other areas that we've been talking to them about include, for example, obviously rural innovation and rural innovators, and doing it in partnership, I think, Representative Hill. While it begins with that discussion with SBA and with ASP-TDC, it also brings in other partners, and that's the other thing I stressed, I think, in our written testimony. For example, looking at SETI and rural communities, we've started to work with the University of Arkansas Medical System and Sciences, UAMS, to do an accelerator for SETI innovators and SETI owners and innovators beginning actually in rural Arkansas. So that's absolutely critical as well. And then obviously we are focused heavily on diversity, on businesses and business owners of color. And we really welcome as well additional corporate as well as government participation. What you've all said before, I completely agree with. You know, government support at the municipal, state, and federal level is absolutely critical, but the catalyst begins here, right, at the community level and in the individual side.
Thanks. Well, these are all, I chair the House Entrepreneurship Caucus, and we look for ways to collaborate on all the things that we've talked about today.
We've got a lot of ideas. We'd love to.
That's right, and that's why I did the town hall with you last year, mostly on blockchain and the regulatory future for digital assets. But this idea of gathering that information and the U.S. Venture Capital Association, run by an Arkansan, I'm a U of A graduate, and the Kauffman Foundation are both very active in that. So distilling those good ideas from the grassroots up to the Congress. I'll close in my final comments in this round to thank Wiley Nickel for his work on accredited investor and Mike Flood. All of us have been doing that. Several of us in this room, Mr. Hendren, Mr. Montgomery, and I, have spent a lot of our careers raising money for other people and doing Reg D private placements, and we've come across this accredited investor challenge, for decades. And so Gary Gensler, who's a fountain of occasionally below average ideas. If he's promoting what you say to raise it to $5 million, that's a below average idea. The bill I support is to make it talent-based. Because what I found at UAMS or in the technology space, you'll have a young innovator who knows everything about the technology, but they don't have the net worth. And so I think making it professional qualifications or talent-based is a way to also do that. Let me yield now to Mr. Flood. Is that right? Yeah, Mr. Flood, for 5 minutes.
Thank you, Mr. Chairman. Ms. Marshall, you and I spoke briefly. You said you had 79 state-chartered banks, I believe.
73.
73?
Yes,
okay.
sir.
Okay. One of the bills that's under the subcommittee chairman's purview right now, and he's been a big water carrier on it, is our digital assets market structure bill. And we think about stable coins, we think about custody of digital assets by state-chartered banks. One of the big questions right now, one of our struggles with the White House and some on the Democratic side in the Senate especially, it's more bipartisan in the House, is that the White House or the Treasury, they think there should only be a federal regulator overseeing the regulation of digital custody of assets, stable coins. I completely resist that. I think there has to be a state pathway protected so that we protect our dual-tier banking system, which is one of the benefits of having such a diverse banking system in the United States as opposed to maybe Europe or the EU or wherever. Talk to us about how important it is that we preserve the state pathway, and is that a hill worth dying on as members of our committee? How important is that to you?
Of utmost and absolute importance, and that is not self-serving as my role as a state regulator. That is certainly critical to the success of our ongoing industry and quite frankly, the foundation of the dual banking system. As I said in my remarks, our firsthand knowledge of what's going on in our communities and with our institutions will not be seen or heard if there is not a state pathway in future regulation and guidance and legislation in and around financial services. It will not come from D.C. It comes from the boots on the ground that the state systems and the state regulators and my counterparts across the country provide. And so it is of utmost importance, and we appreciate and applaud any and all efforts to ensure that any future legislation, whether it's around stablecoin or other digital innovations and digital assets, must include that state pathway.
And I should add, I do support the federal government having a role, just like the FDIC might have a role, or obviously the Federal Reserve has a role in any state-chartered bank. The FDIC is in there inspecting and examining your state-chartered banks.
Yes, sir.
You conduct your own examination. But you need to know, and I'm sure you already know this because you've got such a good representative here, there are a lot of folks in Washington that do not think that the states should have this ability to regulate, especially state-chartered financial institutions as it relates to the custody of digital assets. And I have every reason to believe that as we go in this negotiation, you're going to see a push by the executive branch to make us relent on this idea of dual pathway for financial institutions custodying digital assets. As you work with your counterparts in other states, is this something that state banking directors are talking about? Is your association of state banking directors focused on this? And if so, what are you hearing from your counterparts in other states?
We are absolutely focused on it. It's a core of the discussions as we center around thoughts about proposed legislation, as we work with our membership. As Congressman Hill said many times, we have a deep relationship of knowing each other and working with each other. My counterparts have the same as with your offices and Mr. Nichols' office. And we are all full court press, if you will, on ensuring that message is heard loud and clear. We're also working with the industry because the industry, I think, is important. Certainly don't want to speak for it as a whole, but I believe the industry would tell you in large part they are always conscious and making sure that the state regulators have a part, because that is it's the ability to have the charter of choice, whether it's a state charter or a national bank charter. That is significant and important, and the industry will continue to voice that, in my opinion.
And I will tell you, most of the banks in Nebraska that were OCC regulated have given up their national charters, and they've opted for the state charter in the last 10 years. It's amazing because the OCC has not demonstrated a real willingness to want to regulate a bunch of rural banks and community banks in Nebraska. With that, I'll say This is a very impressive community. You've got a very impressive member of Congress that represents you. I wish I could recreate this in Lincoln, Nebraska tomorrow, because this is the kind of conversation that shows me your community is going in a direction where you're going to build wealth and provide opportunities to the people who grow up here. And I hope it all stays in Arkansas so that this blossoms into something that looks really, 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 really healthy in 20, 30 years. So with that, thank you, Mr. Chairman. Good to see you, Mr. Nickel. It's a pleasure being here.
Gentleman yields back. Do either of you have another question? Because we're good on time, right? Yeah. So you want to do a final round now, a wrap-up round? You just wrapped up. It was very impressive. But we'll let you reopen.
Yeah, I mean, I just have some cleanup, so.
Yeah, why don't we say I'll yield you 2 minutes, and we'll see if there's a wrap-up point you want to make. I yield to my friend from North Carolina.
Thank you, Chairman. I want to first of all associate myself with your comments about the Senate. One of our colleagues famously observed, it takes the Senate 6 months to sneeze. So we're trying to do all we can to be patient on their process on this accredited investor bill. Just as a wrap up, I saw some agreement. Want to just open it up to the witnesses. If you have anything you want to chime in about the challenges you're facing with the current accredited investor rules and definitions. Mr. Wheelis, maybe start with you.
Yeah, I think you're in a very friendly audience for this, because we all understand how important it really is and how to drive that investment level down, because we know that there are a lot of people that would actively support innovation in its highest form if they were granted that opportunity. So yes, we applaud your bill very much.
Anyone else want to jump in here as we close out?
Yeah, just wanted to add to that, which is any of the early startup concepts are actually funded by individual angel investors before any of the venture capital firms come into play. So fully support where you're going with this, because I think we need to expand that entry point for individuals to come in and support those initial founders who don't have the backing of large venture capital firms. And particularly in that seed phase, which is going to be absolutely important.
That 50 or 100 grand that someone's got, could be the difference in some amazing new technology. And right now you don't have $1 million. You can't even get in at that level. Just wrapping up, Commissioner Marshall, really enjoyed talking with you again about our excellent Commissioner of Banks, Catherine Boskin in North Carolina. You are both close. From your experience working with fintechs, what's the advice I should bring back to Ms. Boskin, Commissioner Boskin?
For my counterparts across the country, if they're not already doing it, I encourage them through your leadership and other members of Congress to help cultivate this type of engagement and to ensure that they don't feel that it's maybe inappropriate to engage in those conversations. I believe that it is wholly appropriate and important for the future of it is that we are in those conversations early on. So the regulatory agencies working with the industry, working with the entrepreneur companies, working with members of Congress, if we're all collectively engaging in discussion, we're going to come out on a very strong footing going forward and lead the financial services industry into the next generation. It's critical that we continue to do so, and I encourage them to seek opportunities to engage as well.
Thanks so much. Mr. Chair, I yield back.
Gentleman yields back. Mr. Flood, 2 minutes.
Thank you again, Mr. Chairman. I would say that when I was in Nebraska, before I went back to the legislature, before I ended up Congress, I was on a nonprofit called Invest Nebraska, which receives up to $16 million a year, actually in state funds. Do you have a similar public-private kind of nonprofit corporation that provides access to that risk capital, does some of the vetting, and helps kind of hold the hand of those young entrepreneurs, or not young, any entrepreneur coming in?
Yeah, there are several agencies. The one that probably most clearly fits is Innovate Arkansas, which is a recipient and also channels funds from the state as well as private, and that's something that is absolutely critical. Very familiar with Innovate Nebraska as well, and some of the capital parts that they have, like Burlington. Yeah. They do a great job. Focusing not just on ag tech and bioag, but I think expanding beyond as well. We see the same thing in Iowa. In Iowa, there's an initiative, with Debbie Durham there, who's the Economic Development Director, and BioConnect Iowa, which is a nonprofit, and again, very focused on one particular sector, which is ag tech. Here in Arkansas, though, I think our focus is broad, which I think is important. We've talked about fintech, which is great. We are the birthplace of fintech because of FIS. I think we proudly claim. But I think, Representative Flood, I think the focus, hopefully, that I want to close on is that we are agnostic and supportive of all the different technology sectors, industries, and areas that innovation and entrepreneurship is being explored and being cultivated.
Thank you, and I yield back.
Thank you, Mr. Flood. Well, let me thank our witnesses for being here today. Excellent. And tell my fellow members that I'll give you 5 legislative days if you want to submit a question for the record, and ask our witnesses to answer those promptly. And I want to thank everybody in Little Rock and the Venture Center for hosting this day. This is exactly what this building is for, and we've had such a success over the first decade here at the Venture Center. We're really looking forward to the expansion that's going to be announced shortly, that's going to continue to see the Venture Center expand its mission. And this was something I certainly dreamed about when I was the chairman of the Chamber of Commerce here, that we would have a more risky outlook for development here in Little Rock. We're great at logistics, we're great at wholesale, we're great at transportation, we're great at healthcare, we're great at government, we're great at service businesses here. There's no doubt we're a capital city, and that's what it feels like. And so we don't boom and we don't bust, and we used to brag about that for 40 years economically here. But my pitch as chamber chairman was, we need to increase our risk profile. We need to have a wider beta on the companies that operate here, because that produces wealth and gain and career opportunities for people over the long haul and at a much faster rate. And I think this has been an exciting first decade for the Venture Center. And Mr. Wheelis, we're so grateful to you for your partnership at FIS, and hope that the innovation you've seen here has helped expand the portfolio of product offerings for your global audience at FIS. With that, if there's no other questions from our members, this hearing is adjourned. And let me just say in closing, having adjourned the hearing, we're going to have an opportunity to hear from Bank Labs and Bond AI and SecureTech, and have a bit of a demo day down the hall for our members, so they get to hear and ask questions of portfolio companies that have done so well here at the Venture Center. Thank everybody for coming out today.